That Corvette in the thumbnail is a picture of the Corvette that my father-in-law, Virgil, bought my son, Trent, 2 weeks after he was born in 1969. In essence, what happened was I married Nita, who was an only child, and my father-in-law said, if you will give me a grandson, I will buy him his first car. Well, that's in fact what he bought him, and we still have it. And I illustrate that to show you that GM's days are over. I mean, the new Corvette is magnificent, but they, as a car company, they're done. They need to be re-engineered, and I want to go into detail into that and show you dollars and cents and the financials, why GM is done and why they need to be re-engineered. Maybe Tesla needs to take them over or somebody. So I'm going to do a financial analysis of Tesla, Ford, and GM. Now, Homer tells me I need to move on, that I've done enough of this, I've educated you enough, but I don't think I have, because I just saw this morning AEHR Air Systems was down 14%, and I did a off-the-cuff video to show you why I bought into it. I think the market's got it wrong, and I go into the financials and I show you that, because what I want to do is teach you to learn how to know what you're buying, understand the financials, because if you're buying a share of a business, what you're basically doing is saying, I want to buy into the future profits. Well, the only way you understand that is not listening to a YouTube guy or Jim Cramer or somebody saying, hey, this is a good buy. No, you need to dig into the numbers, the same as you would do if you were buying that local hardware store that's competing with Lowe's and Home Depot. You'd want to know, what are your profits? What are your future growth? And that's where you build your portfolio around. So this is not financial advice. Get that straight. This is me sharing my education.
Best of Us Investors presents Kerry Griegmeyer.
This is GM's balance sheet, and you're going to see that they have $38 billion worth of short-term debt and $75 billion worth of, almost 76, of long-term debt, for a total debt of $114 billion. That's extreme. That's very extreme. But then at the same time, let me just show you, this is their income statement, and the cost of that debt is low. If you'll do the division, you'll find that the cost of their debt is less than 1%. Well, why is that? Well, it's because they have interest income coming in to offset some of their interest expense, and on their books it makes it look like their debt is very cheap. And what this is, as I'm guessing, is their dealers are paying them interest on the cars that they have on their lot until they sell them and buy them from General Motors. And so that throws that number off. But nonetheless, I think it's very important to look at their income patterns. Their income is sporadic. Here they lost money. Here they made money, made less, made more, made less. So their income is very erratic. So my point is, their debt, as you can see, has gone up about $10 billion since 2018. If we put a fair price on that debt and ignore the number that they're showing, and put a calculation on $114 billion worth of debt, and say the cost of that debt is going to go from the realistic number of 4% to as high as 10%, this company is going to suffer. So if we look at this interest expense at just under $1 billion, and we calculate it based on a 4%, what their total debt is of $114 billion, the real cost of that debt is $4.5 billion, okay? So now if it goes from a 4% to a 10%, that cost of interest now goes to $11.5 billion, or up $7 billion. Well, they have net income of 9.9, call it 10, and we're going to subtract the cost of the increased cost in debt service, but which is an additional 7. So their $10 billion worth of net income comes down to $3 billion. That's a 66% reduction in income. I think that, along with the problems they're having with their strikers, I think I think the song is done. I think it's over. So let's then go look at Ford. Let's look at Ford's income statement. Here we have a negative interest rate or expense. Why is that? Again, they're collecting money from their dealers for inventory of cars, which is interest income. So that becomes up a negative number. What in fact is their amount of debt? Well, their total debt is $140 billion. That's even bigger than what General Motors was. General Motors was 114.7. Total debt on Ford is 140.5. So if we then say, well, what is the real number there? Well, if we assume that their 140 billion is actually financed at about 4%, that means their actual cost of debt is 5.6 billion, not a minus 643. Now, if we say, okay, what is that going to cost them? 140 billion at 10%, that's 14 billion. So that's an increase of just under 9 billion. So what's their net income? Well, they showed a loss. So that means that we can expect that if it continues to go at the way it is, that number will become a minus 11 billion. Ford is done. Ford is done. They just don't know it yet. But be aware. Now, you'll look back and say, yeah, but in 2000, what would that be? 21, they made 17. Okay. I can't tell you exactly why. It looks like it came from, again, the tremendous negative interest. I don't know what that is, but it scares me. So I would be a seller of Ford. So with that in mind, now let's go and look at Tesla. This is Tesla's income statement. And as you can see on the top row here, their revenues have just continued to grow. Okay? Their interest expense has actually come down. That's very different from the last two. Their income back in 18, and I'm reading Walter Isaacson's book, and he explains they were in deep trouble in 18 and 19, and then basically turned the company around in 2021. And you can see their income is on a positive upturn. You don't see a negative number like you did because they don't have dealerships. They don't have dealerships. They're all company owned. So the company looks strong. Now let's look at their balance sheet. This is Tesla's balance sheet, and you can see their assets are growing just tremendously. Their debt, their short-term debt is basically staying level but going down. Long-term debt is coming down substantially. Let's look at their total debt. Their total debt has gone from $11.9 billion in 18 to 3 billion in 2021. So, or 2022. So this shows me a company that is in very strong position and getting stronger. This net debt, what does that mean? That means they have $19 billion more short-term investments and cash to pay against their debt. They're in extremely strong position. Look at their retained earnings. Losing money, making money, 4 times increase. So the only thing I see that could hurt Tesla, and as I say, I'm reading the book and getting a real insight to who Elon is and how he made this company work, something I think you should do if you own Tesla. You need to know what you own. And between its financial statement and Walter Isaacson's book, you will learn what you own. So that's how I approach investing. That's how I say sell Ford by all means, sell GM. And you're right, Homer. Buy Tesla. Buy into Elon. Read the book. You're going to come away with an understanding of how companies are built, how Elon thinks, which is kind of fuzzy, but it's how you should become an educated investor. If you'd like to be exposed to more of this, just come and go to Best of Us Investors down below and find this page, or this where you sign up for our platinum level. This is where I expose you to. Let me show you. This is the analysis of all the stocks that I have, and as you see, it's uploading today's data as you see it. And then also, I have done the same thing on the S&P 500. So I can go through the S&P 500, look at these numbers, and I can know who is going to get hurt worse by the increase in interest rates coming from their debt, how much their debt is, what it costs them at 4%, and what it's going to cost them at 10%. And until you see Jerome Powell reducing interest rates, this is the most important factor on the current and future stock price of any company you own. And as I say, I've got everyone here in the S&P 500. This, once it uploads, it's got 11,000 uploads that it has to do every morning, and sometimes I exceed the amount. But I'm working through that, and I'll make this available to you. How do you do that? Again, go to the page, the Best of Us Investors page down, see the platinum entry level, and get on the bus.